Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite strong historical monthly support and demand area. Why do I say this? Because in the past we can see how in multiple occasions the market tested this zone and rejected it to the downside every single time. Now the market has broken above that zone, and what we know is that previous resistance, once it is broken to the upside, is turned support. The market tested here that previous resistance turned support, and it is currently rejecting it to the upside. So from a monthly standpoint, everything seems quite bullish. We can also notice, if we zoom in into this most recent price action, that as the market was creating this impulse and correction pattern, if we want to measure the correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements, which are lining up perfectly with this previous historical resistance, which is now turned support here. And this actually creates confluence of support, because when you have multiple layers of support in the same area of price, that creates confluence of support. And in a situation like this, that is exactly the level that you could expect the market to potentially want to reject to the upside, which is in fact exactly what the market did. And most importantly, inside of a confluence of support zone, you have an increased probability of getting institutional longing, which is something that we will be speaking about in just a few moments when we move to the commitment of traders analysis. So what hedge funds and the big players in the market are doing. For now, let's just keep in mind that the market is rejecting such a strong area and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. The market is currently testing previous weekly resistance from which this move to the downside was created, which is now turned support here. Now, until the market remains above this previous resistance turned support, more bullish price action could be expected away from this level. The problem is that there is currently a range that the market has just established here from a weekly perspective, which is basically the area in between these two zones. We have the top of the range, which is currently acting as resistance here, and we have the bottom of the range, which is currently acting as support here. Now we can see that the last test was of the bottom of the range, so the next logical step would be for this market to go and test the high of the range to see what kind of liquidity we have at the top of this level. And as for most times that the market creates ranges, there are some in the intermediate level of structure, which in this case we definitely have, which is exactly the previous weekly resistance turn support that we were speaking about just a few moments ago. So as the market is testing this intermediate level of previous weekly resistance turn support, there is a possibility for a rejection away from this support for the market to go and test the high of the range. So from a weekly standpoint, there is definitely the possibility of a potential rejection to the upside and the market to go and test this high of the range. Dropping down on the daily time frame, what do we see? Now, before we dig deeper into what we have from a technical perspective here on the daily, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing precisely on gold. Now, the first thing that we have to keep in mind is that if we're looking at the data for gold, we are actually already looking at gold against the USD, because It is essentially on the spot traded against the USD. And what we can see here is that with the last reports, we can see a massive amount of increase of the net positions. We went from having 131.1k net positions all the way up to having 241.5k net positions. So we had a massive amount of increases of net positions, meaning that institutions have been increasing their longs and decreasing their shorts. We can see, in fact, how the shorts from an institutional perspective, just in these last few reports, went from 70.9k all the way down to 38.5k. And longs are currently sitting quite high from an institutional perspective at 280k. So on the institutional side of the market for gold, we have 280k longs compared to only 38.5k shorts. So definitely institutions are positioned to the bullish side for gold. Now, let's keep that in mind and move back to the technical aspect of the market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, at the moment the market is testing this previous daily resistance from which all these rejections to the downside were created, which has now turned support. Now, since the institutions are so positioned to the bullish side for this market, in the retest of the previous resistance turn support, there is a possibility of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. We can also notice that as we have an impulse and correction, again, as we said previously, if we want to measure that correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows how we have a 0.32 50% and 0.618 Fibonacci retracement level, which is currently lining up exactly in this zone. And as this market is a confluence of support zone, again, because we have the Fibonacci levels and the previous resistance turn support, that increases the probability of seeing more institutional longing, since we are even already seeing institutional longing, which further increases the probabilities of a potential rejection to the upside away from the level. So what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.